Indicator Overview and Composition. Smart Money Flow, Algo, is a comprehensive trading operating system that provides multiple bottom fishing, entry, and top picking, exit, signals, along with risk management protocols and position sizing to help you build your own trading framework. This system is perfectly suited for stocks in a ranging market, consolidation, as well as those trending upward or downward within a channel. However, once the trend breaks down or the market structure is violated, the indicator signals may experience consecutive failure during the breakdown process. In this scenario, you need to enable the funds filter, detailed later. This indicator consists of three parts: the main signals, the market radar, and the info panel at the bottom right. Part 1. Main Signals. This system contains a total of 19 primary signals, bottom fishing signals, 15 types including Algo 58 to Algo 69, as well as market bottom, extreme fear, and others. Top picking signals. For types, these are top warning, risk alert, RSI overbought, and extreme greed. Currently, these 19 signals are comprehensive enough to cover the vast majority of individual tickers, effectively capturing tops and bottoms in most market scenarios. Part 2. Market Radar, top right. This section includes the current technical trend status and market heat, as well as the ATR, average true range, value. It also provides reference values for entry, take profit, and stop loss. It automatically suggests TP/SL prices based on your self-set risk, reward ratio and position size, which I will demonstrate how to use shortly. It also displays the required win rate for the risk-reward ratio you set. This part will be detailed later. Additionally, it shows trailing stops, the maximum allowable loss amount per trade, and, based on your account size and risk tolerance, the maximum number of shares you can buy. It also displays the status of the RSI. Part 3. Info Panel, bottom right. There is an information panel in the bottom right corner. The content displayed here usually needs to be used in conjunction with the indicator settings. There are two switches for fund flow filters here. In a normal ranging market, there is no need to turn on switch 1. However, after the original trend is broken, it is recommended to turn this switch on, as it can filter out many false signals. I will demonstrate how to use this shortly. Fund switch 2 is not yet fully perfected, so I suggest you ignore this switch for now and focus only on current CONC, concentration. Generally, after a stock has consolidated for a period, if this concentration is above 90% and the stock price is at a low level, it is very likely to be a massive runner, big winner, in the future. Note, top picking signals have a higher accuracy rate on the broad market indices. However, for individual stocks, it is recommended to use them as a reference for scaling out, taking profits in stages. Especially for stocks in their main uptrend phase, top signals might cause you to sell too early. Bottom fishing signals also need to be used in conjunction with support and resistance levels to decide whether to open a position. It is best to use bottom signals based on indicator strength and price location. If a stock has been moving sideways for a long time, even weaker signals are very meaningful references. If a stock is crashing, breaking down, even very strong signals might fail. In this breakdown scenario, it is recommended to enable funds filter 1, as it will filter out many false signals. The indicator is for reference only, do not buy blindly. Meanings of major signals. Algo 58 to Algo 69, you can roughly understand this as the success rate of the signal for bottom fishing. For example, Algo 58 often represents a win rate of approximately 58% at a 1-to-1 risk-reward ratio. Algo 69 represents a 69% success rate. These figures are derived from a 10-year backtest of over 4,000 stocks in other markets. Market bottom. This generally works better on the broad market or larger cap tickers, specifically on the S&P 500 daily chart, where the success rate is very good. Other text signals, you can refer to their literal meaning. For example, weak buy obviously means the bottom fishing strength is not strong. Strong usually implies the signal strength is relatively high. Generally speaking, the bottom fishing strength of numeric signals is greater than that of text signals. Next, let's look at the funds filter function. As mentioned earlier, when a stock breaks its original trend, the bottom fishing signals that appear at this time may fail. Sometimes, consecutive bottom signals appear, but the stock price keeps falling. In this case, we need to turn on Funds Filter 1. We open the Settings panel, find Enable Funds Filter, check this option, and then check Auto Strength Threshold. If you don't want to check Auto Strength, you can change it to Manual and set a value to help you filter. Automatic is more scientific, so I suggest everyone use Automatic. We can see that when we enable the Funds Filter, most of the false signals are filtered out. That is to say, if we turn on Funds Filter 1 and the main bottom signal still exists, then you must pay close attention. Is this stock about to bottom out and rebound? Then let's talk about how to use ATR to build your own trading system. The Market Radar will display the daily ATR, average true range, value for each stock. ATR represents the stock's temperament or volatility. Stocks with high volatility have high ATR, like Tesla, and stocks with low volatility have low ATR, like Coca-Cola. Then, based on each stock's temperament and the values you set yourself, the Market Radar automatically calculates and displays the reference stop-loss point, take-profit point, the win rate needed to break even, the trailing stop/profit location, the maximum loss amount, the safe position share count, and the current RSI value and status. How do you use it? After opening Settings, find Market Radar. For the ATR stop multiplier, I suggest selecting 2. A 2x ATR generally prevents you from getting stopped out by short-term volatility. After we select this 2x, we will see that the take-profit and stop-loss prices change. Next is the risk-reward ratio. I suggest using a 1.5 risk-reward ratio, so select 1.5 and take-profit ratio. After selecting, we will find that the Market Radar displays the win rate you need to achieve to break even at this risk-reward ratio. At 1.5x, the win rate you need is 40%. Next is Position Management. In the Settings, find Position Sizing Management. In Total Account Size, fill in your total account balance. If it's 100K, write 100,000, if it's 1 million, write 1 million. For risk PER trade, it is best to choose 2%. This controls the loss per single trade. Think about it, if the maximum allowed loss each time is 2% of the total amount, then even with 10 consecutive failures, you have only lost 20% of your principal. It is very easy to make that back. If you choose a very large number, like 10%, and you have bad luck and lose 10 times in a row, you won't have much principal left. It is too hard to earn that back. Then there is Max Position PER Asset. This is the maximum position size we allow a single stock to occupy. If you plan to hold 5 stocks with an equal distribution, then this value cannot be greater than 20%. Let me give you an example. Suppose we want to buy 3 stocks, so write 30% here. After these numbers are filled in, you will find that the Market Radar will display the maximum number of shares you are allowed to buy. This ensures that within your set rules, it fits the ATR stop loss, fits the total loss of no more than 2%, and also fits the single stock holding of no more than 30%. You can set these values according to your own capital scale.